Good morning, good afternoon, evening, greetings from wherever you are. I just wanted to make a quick little week ahead video, what I'm looking to see pan out throughout the course of this week. So let's start off with the usual, the dollar index. For the past about 12 weeks on the dollar index, we've been seeing higher prices. We have 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11 weeks back to back closing bullish on the dollar index, and seeing us sweep internal buy side liquidity and immediately seeing this rejection is something that I would consider acceptable, even though I still have this buy side liquidity being my final target on the dollar index. Of course, on my previous videos I've already outlined why I'm looking for this specific area to be my final target before seeing some sort of pullback, consolidation, or complete reversal. So ultimately, for me, I am still bullish on the dollar. Me deleting this PDRA, we can already see that on the discount levels we have this weekly buy side imbalance, so a weekly BC residing in there. And let's remove this buy side liquidity because we've already swept it. And one thing that I wanted to note was the fact that we rarely created a buy side imbalance on a weekly chart. The last time we did that was here, and that was a breakaway gap. Since then we had a small one here that we tested. We also, I believe, had another small one residing here, a very small buy side imbalance, and we left this open to see higher prices. So this is the first buy side imbalance in a few weeks now, and I would like to see if we could use this as support for higher prices. We can remove these old PDRAs. The reason I was saying let me delete the 9-hour chart PDRA is because when we go down to the 9-day chart, even though we haven't closed yet, even though we haven't closed this candle, which closes in 8 days and 4 hours, I believe that this would create some sort of immediate rebalance, something similar to what happened here. So this was a candle that traded and closed bullish. We also had this one that was bearish and closed bullish. At this point, price was here, right? And we had a potential to create a fair value gap, but price traded lower to immediately balance out the previous candle and shot higher. So I'd like to see if something similar to that could be formed here at this point. An immediate rebalance with these candlesticks high and push higher. Going down to the lower time frames, to the daily chart, we also have a buy side imbalance residing over there in a smaller scale. And to be honest, personally, I do not mind seeing us trade below this swing low on a 9-hour chart. I don't mind us trading below that. And actually, now that we already have the daily BC highlighted, we can replace it with the 9-hour chart, 9-hour imbalance, I mean, highlighted over there, and label that as our BC. So I don't mind seeing us trade below this swing low, but I don't want to see a 9-hour candle close below this swing low. So what I'm looking to see is if we can trade lower as a quick turtle soup of these lows and then continue higher to the target that we've been highlighting the past couple of weeks. So I'm looking to see if they want to sweep these lows as a quick turtle soup before pushing higher from here. So my invalidation point, where I would consider the trade no longer valid, or where I would possibly say that we might be having a market structure shift or a market structure break to the downside, would be this swing low. So the previous prominent swing low that we have on a daily chart. So if and when we ever trade below this low, I could consider us seeing a possibility for lower prices on the dollar index. But for now, I'm still bullish until proven otherwise. In my next video, I'm probably going to cover what I'm seeing from the COT data and interest rates, doing a complete top-down analysis for the new month. And speaking of the new month, we also have the monthly candle trading higher, creating a wick. It does not have a tail yet. Well, we have a very tiny tail there, and I believe we want to create some sort of tail inside of this area before pushing higher to hit the final target at the consequent encroachment of the monthly sell side imbalance, which is my target, my terminus. So that's what I'm looking for going into this week. Of course, we don't have the 8 p.m. closing time, but at the point we have that closing time, when we do print the 8 p.m. closing time, I'm also going to note my true week opening, and of course the true month opening, which was the first month, which is the first Monday, which in this case it's going to be the true week opening as well. So I'm looking at that on the dollar index. The next on my list today would be a little bit different than what I'm used to, which in this case will be DAX, the Germany 30 index fund, and I'm looking at this purely from the weekly chart. So on the weekly chart, we had an immediate rebalance happen a few weeks ago, and we have this week opening again without any top wick. So I'm paying attention to this and a possibility that we may want to trade higher to create a wick before continuing to create a tail. So it's open, low, high, close, or something of that fashion. I'm also looking at this inversion fair value gap. So I'm going to set an alert at this inversion fair value gap, because ultimately I'm looking to see if we can get lower prices, being so close to the sell side liquidity that we have at this point. Have a sell side liquidity there, and we have a mitigation block at that point. So these are my targets going into the week ahead. So overall, on the German 30 index fund, I'm looking to see if we can have something like this. I'm probably going to take 100% of my positions off at this point at the mitigation block, and my invalidation point, since this is a fair value gap, I usually should be taking the third candle that created it, which is this one, but that's too far for me. So let's see if we can narrow down the entry. We have a 9-hour chart, a 9-day chart here that could possibly create a fair value gap, but it's going to be closing only in 8 days. So we still have a little bit of time before this 9-day chart closes. On the 6-day chart, we have the same inversion fair value gap, but it's been tested already, and we may be prepared for lower prices from here, but I'm still looking at it from a weekly perspective of the possibility of trading here. And staying on this chart, actually measuring this long wick from this high to the low of the wick, we can see that the 50%, which is the consequent encroachment, is actually inside of the inversion fair value gap. It's this light blue line. That's the 50% mark, and we can see it's already inside of the inversion fair value gap. So if I'm going to be using this wick alone as my entry, then my invalidation point would be sitting at this high. So basically 100% completion of the inversion fair value gap. So that's my invalidation point. Of course, we can still narrow down the entry even more if we wish. And again, mitigation block on a 3-day chart, which is again inside of the inversion fair value gap. On a daily chart, we have the same mitigation block, and of course the consequent encroachment of these wicks being a possible area for us to take price lower from. So this swing high remains my invalidation point even on a daily chart, and I believe the same would be the case even on a 4-hour chart, because it's the cleanest area for an invalidation is swing high. So that's my entry, invalidation, and targets of course being this low and this low. The next one on my list, again as I've already mentioned, I'm not going to be going in any order in particular, and I'm just going to go through everything I have on my chart. So we have the E-mini S&P 500. This is the continuous contract, not the December contract. So already, as I've already mentioned multiple times in the previous videos that I've been recording, I'm looking to see if we can see lower prices on the indices, and already we can see where my next draw in liquidity would be short term, and then longer term I'm looking to see if we can hit these equal lows residing at those levels there. So this sell side liquidity, this swing low, and this swing low, and finally these lows. My targets moving into the coming weeks. So firstly, we have this sell side imbalance, but even more specific, inside of this sell side imbalance we have an order block. So I have two PD arrays that are nested within each other that I'm paying very careful attention to. So we have this order block, and because of that I'll actually outline this order block for the sake of setting an alert on it to see if we could possibly get a retracement into the inefficiencies before seeing lower prices going into the rest of the week and of course month. So this is what I'm looking for going forward on ES. We have the 9-day chart, same structure or similar structure, and a possible fair value gap formation when this candle closes in 4 days. 6-day chart, we have a sell side imbalance, and then of course on a daily chart, which is our main chart, well, my main chart that I pay attention to, we can see at this point we have this swing high that we just took out today we have these highs residing here, and then of course inside of these highs we have this daily fair value gap. So we have a daily fair value gap, which I should also highlight and set alerts for. So we have a daily fair value gap and a weekly bearish order block. Of course, the same order block is here on the daily chart, and I'm looking to see if these levels could help support lower prices. But ultimately, I'm still bearish on the indices until proven otherwise. Same concept as the dollar index. The next instrument that I'll be paying attention to is silver. So we have XAGUSD. Let's start off with the weekly chart. On the 9-day chart, on the weekly chart, we have this sell side liquidity and this sell side liquidity that I'm paying attention to. Of course, if we're looking for low hanging fruits, we also have this sell side liquidity that came from last week's low. So this is my short-term drawing liquidity going into the new week, and already we can see I highlighted this order block, and it may not be clear on a weekly why specifically this tail and not this tail, for example. This is because this order block is from a 9-day chart. So I know that this candlestick has not closed yet. We still have 8 days and 2 hours to close. But my focus, my attention is on this 9-day, let's actually label it 9-day order block, because we may see a trade up into this area, creating some sort of immediate rebalance and then continuing the trend to the downside. We also have inside of this daily order block, if you are not an order block trader, we also have an inversion fair value gap, a BC here, that did not hold higher prices, and we broke through this buy side imbalance at this point with this giant red candlestick. So now we could possibly see us using this BC that has now turned into an inversion fair value gap to see lower prices. So this is what I'm looking for on silver going into the new week. I don't see any other possible setups on this. I have already set my alert when we tap into the 9-day order block. On the 3-day order block, we also have a CB, an inefficiency in the form of a sell side imbalance residing inside of the 9-day order block. So I'm looking to see if we could find a possible sell-off from this area, with of course my invalidation point being at the swing high of either the high of the order block or the swing high here on the daily chart. So this is what I'm looking for going into the new week. The daily chart looks similar, just have a breaker at that point and trading lower. The next pair that I'll be paying attention to in the coming weeks is US oil. I've been dabbling in US oil for some time now, and I decided to add it as part of my watch list. The unfortunate thing about US oil is that I was looking at it from Friday, the closing of last week. We have Friday's price trading into this weekly order block, and I believe an even higher time frame order block. So we have the 9-day order block residing there, which has a fair value gap, and we can already see the immediate rejection from that area. We of course also have the 6-day order block, same area, 3-day, same thing with a fair value gap, and of course the daily having a nested order block entry in that area. So I had already told myself that on Friday while the markets were closed, I had already told myself that when we opened on Sunday, and I also set an alert for the possibility of us trading into the 100% of this 9-day order block, hoping that we could tag this white line before continuing to the upside, with of course my stop loss being at this low. Reason I would put my stop loss at this low, because I don't believe price would have any need to trade back into this area, because we've already used it to support higher prices with this buy side imbalance from here. So my stop loss is going to be at this swing low, looking for higher prices. But now that we had what we had with Israel and all that over the weekend, I am not really sure how to trade oil going into this new week. What I will be paying attention to though is the basics of ICT. So looking at this swing high here, right? We have a sweep in liquidity. We at this point have a market structure shift with this swing low, because we had a closure below this swing low. So that becomes our official market structure shift. We also now have a massive sell side imbalance residing here. Of course, I am ultimately very bullish on oil, but we may see a potential sell-off from this order block, or from this inefficiency, this sell side imbalance, back into the back to fill up the new week opening gap. So if we do trade into this order block going into Tuesday and Wednesday, I might consider selling it off from this order block, of course using the order block high as my invalidation point, and targeting a complete closure of this new week opening gap. But then if and when we do close it, I might consider taking oil back up into the 110 areas. So that's my plan. My plan on US oil, of course similar for UK. I don't really trade the UK oil, but I use it for SMT divergence and other confluences. Of course, we also pay attention to the futures, which is CL1 exclamation mark. We have that getting tapped to the tick on the futures contract. This was what made me feel that I should just take the trade as we opened on Sunday. But of course, we can see we've already tapped it and rejected immediately. So if I had found a way to just take the trade on Friday and left it be, I would have been in profit on this trade right now. But we're not looking at that. And of course, as I said, longer term, I'm aiming for these highs, which is around the 115 area on oil. So this would be a swing trade target, but that's not what I'm looking for right now. I'm just looking for this swing high first before looking to see if we can trail it higher. So this is all I have on oil, and I guess I'll update based on the progress on what will unfold throughout the week. So paying attention to the order block again. Let's highlight this one from the futures contract, because of course, as we know already, the futures contract is what everything is derived from. So we're paying attention to that to see if we can get lower prices. Moving on to the next one, which in this case is EURUSD. Starting off with the weekly chart. Actually, let's move to the monthly chart. So I know this is written my take profit, but this is just a monthly buy side imbalance, which we have already traded into on the dollar index. Let's make the visibility on the months as well. So this is my target on the euro. after sweeping all these internal sell side liquidities, I'll be looking to see if we can trade into this, and then when we do trade into this, I'll be done for the year, I'm guessing, on euro. One thing I do want to highlight while we're here on the monthly chart, which I don't think we will get, but I'm highlighting this bearish order block that we have residing over there. So we'll see that on a lower time frame. So when we go down to the weekly chart, we have the bearish order block being that candlestick there. Ignoring the vertical lines for some time, for a few. It's all about the quarterly cycle that they teaches, but we have this other block from the monthly chart. I am looking specifically at this swing trade on euro, which is this sell side imbalance on a weekly chart. The reason I'm looking specifically for this weekly sell side imbalance, this weekly fair value gap, it's because we haven't really created another fair value gap. Just like on the dollar index weekly chart, we haven't created a fair value gap in a long time, I believe in 10 weeks. This was the last one that we created from the high on the 24th of July. We have not necessarily created any other fair value gaps along the way. And for the first time in 1, 2, 3, 4, 5, 6, 7, 8, 9, in about 9 weeks, well, counting this week would be the 10th week. In about 10 weeks, we finally created a fair value gap, a CB. So I'm looking to see if we can trade into this and see lower prices, of course, mentioning my target being the 1.03950 area, 1.04 area. So I'm looking to see if we can trade into that, and trading out of this CB, this sell side imbalance, is completely permissible to me, because whenever you take a trade with a fair value gap, the stop loss always goes to the third or the first candle, depending whether you're planning to buy or sell. So in this case, I'm planning to sell. I have this 1, 2, 3 candles being the one creating the fair value gap. So in this case, I'm looking for lower prices. My stop loss, my invalidation point should technically be at this swing high. So that should be my invalidation point, which I should actually note. I do not want to see us trade at all above it. Normally I would say I don't want to see us trade and close, but in this case I don't want to see us trade at all above this invalidation point if I'm looking for bearish prices. The reason this is here is because of that monthly order block, which obviously collides with the weekly and I believe also the daily. But we have this order block, and it's permissible to me for us to trade into this area, but not to close above this area, and especially not to trade above this swing high. So I'm looking for lower prices going into this week on euro, and this is all I would like to see. Of course, going on to lower time frames, skipping to the daily chart, we can already see that this has been the range that we've been working with. Let's delete this. We have Friday's price, Thursday, Wednesday, Tuesday and Monday. So this range from this red candle till this one is the previous week. So in this area we have the previous week high, and in this area we have the previous week, I mean in this level, not area, in this level we have the previous week low. So following the classic 2022 model, if and when we can sweep a previous week's high and then get a lower time frame market structure shift we could possibly see lower prices on euro, but I may not wait for that confirmation, and I may just take the trade without waiting for a lower time frame market structure shift or this swing high to be taken, because if we remember earlier in the video, I highlighted how I would also like to see us sweep some sort of liquidity on a daily chart. Of course, it was the sell side on a daily for the dollar index, but other than that, I'm looking for lower prices anywhere between this area and this area going into the week ahead. Of course, going into the week, I would like to see if we can get signatures for lower prices on euro. And moving on to the next one, we have gold. Let's start off with the weekly chart. So on a weekly chart, as we can already see on my screen, on my chart, we have an inversion fair value gap, because this BC, this buy side imbalance, has failed to support higher prices. We broke through it and closed below it, and got so close to sweeping this sell side liquidity, this swing low residing here on the weekly chart, which actually is my target going into the week ahead. The problem with gold is that it's very highly manipulated. We may get us trading higher into the consequent encroachment of this entire gap. Let's clean this up a little bit. So as I said, we may get us trading into the consequent encroachment of this fair value gap, this sell side imbalance, with the amount being 1881.47 on forex.com data. But I would not like to see us trade up to that level, which is actually why I highlighted this weekly order block as well. Just in case we do trade up to that level, I might look for an opportunity to take price lower, but ideally I would like to see us continue from this inversion fair value gap. I don't see any real need for us to be trading higher, deeper into the range, and I would like to see if this inversion fair value gap can hold for lower prices. Going down to lower time frames, we have the daily chart. When we opened on Sunday, I had seen price trade into this daily CB, this daily sell side imbalance, and I had taken a test trade with 0.01 lot size. At this point, at that time, it was the high, and now I'm seeing us trade deeper into the inversion fair value gap. Something interesting I saw on a 4-hour chart, and I believe even a 9-hour chart, these candles, these 1, 2, 3, 4 green consecutive candles. Before continuing, let's get rid of these vertical lines. We can see something interesting about this candle is that we can see how at this point we had keeping in mind that this is a 4-hour chart, so we had 4, 8, 12, 16, 20 hours, essentially a whole day with this very tiny range. We broke out of the range, trading lower, and then leaving a piece of this sell side imbalance residing there, and this high. I know it may not be visible, but we actually did sweep this high by a few pips, by a few ticks outside of this swing high. So yes, we have this sell side imbalance here residing on a 4-hour chart, this fair value gap. So we traded lower, built up momentum, swept the swing high that was residing here, and displaced lower. But in the process, we created these 4 consecutive candles. So in a way, we actually just created an order block. So we have 1, 2, 3, 4, which is 4, 8, 12, 16. Meaning if we go to a 16-hour chart, this would now become a solid green candlestick. So in a 16-hour chart, I would like to see if this order block could possibly hold for lower prices. Remembering that we just talked about how I wanted to see the weekly inversion fair value gap support lower prices. Inside of this weekly inversion fair value gap, we have the 16-hour chart, which has the order blocks, which has this order block that could support lower prices. So I'd like to see if this area could support lower prices, and I will actually pay very close attention to this. Of course, if I'm taking this trade, which I am planning to, even though I really don't like trading gold, but I'm planning to take this trade, and obviously my stop loss in this situation would be the swing high. If and when we do trade into this weekly order block, or the consequent encroachment of the weekly buy side imbalance, I may not consider taking gold yet again. I may not consider taking a second entry after this setup here could fail. So I'm paying very close attention to this order block, this specific green candle. If you remember in one of my other videos when I was explaining what an order block is, I did ask the question, how come after so many consecutive red or bearish closing candles, we have a random green one sitting there? And the answer to that question is that they usually do that intentionally because they want to build more orders at that level to push price lower, to continue the direction of the market. So some people might be thinking this low is essentially the low. This low has now bottomed out, but I still think and I still want to see lower prices on gold, even though it's heavily manipulated. I would like to see what outcome we could get from this. And the last thing that I would like to cover is NZDUSD. Of course, I did not mention GBPUSD because it's a very similar structure, and similar structure as EURUSD. I'm looking for this fair value gap after sweeping the previous week's high and the week after that, the week before that, into trading into this fair value gap in a form of a sell side imbalance before seeing lower prices targeting this sell side liquidity. So going to a daily chart, it's literally the exact same structure that I've always had planned out, same direction. I don't believe that we've bottomed out until or unless we take this swing high, specific green candle. If we take this swing high out, then I can call that a market structure break or a market structure shift. So right now I'm still looking to see if this sell side imbalance could support us for lower prices on the pound. So going back to where what I wanted to cover, which was on the Kiwi, on NZDUSD, it's a very simple setup. I'm still looking for higher prices on the dollar, meaning I'm looking for lower prices on NZDUSD or anything that is against the dollar. In this case, I'm looking at this weekly volume imbalance. Only when we trade into this volume imbalance that I'll consider taking sells in Kiwi to take out this sell side liquidity, and possibly this sell side liquidity depending on how bearish the New Zealand dollar is or how bullish the US dollar is. So I'm looking only at this volume imbalance. Of course, my invalidation point being the candle that created it. In this case, it's that swing high. So that's all I have for now. If you have any questions, of course, please ask in the comment section. But if there is nothing else, I wish you all the best as we have CPI this week, and FOMC at some point later in the week. But good luck and good trading.